Hey everyone, how's it going? It's Russell Matthews here. Now on the channel, we've already talked about how real estate and other financial markets right here in Canada are being heavily manipulated since the beginning of the pandemic. But now, the people who are responsible for it are finally starting to own up to this. And what's their response? Well, it's essentially, we're aware, but we just don't care. And with expectations absolutely skyrocketing when it comes to Canadian real estate, it's important to take a closer look at exactly what's been going on. So in today's video, I'm going to show you exactly what statements were made that have the responsible individuals essentially fessing up for what's going on here. And we're also going to take a look at how certain politicians and certain heads of Canadian institutions are using their language to actually pump up these markets further. And finally, we'll take a look at some solutions that are being proposed and how they might not be all they're cracked up to be. But of course, if you haven't already done so, check out the links in the description where you can open up your own investment accounts. And if you haven't already done so, subscribe to the channel, hit the notification bell to keep on supporting Canadian content just like this. Okay, let's dive in. First, we need a recap on exactly what's been going on. Since the beginning of the pandemic, the Bank of Canada has been printing anywhere from $4 to $5 billion per week. Now, we won't get into the nitty-gritty of exactly how this works because I already have a video on that. You can find the link in the description, but what we will get into is the effect on the markets. This mass money printing has lowered interest rates significantly, and it's also provided lots of liquidity to banks, allowing them to lend more mortgages and be a little bit looser with credit. Now, this has increased the amount of buyers in the buyer pool for the real estate market, and as a result, that's shot up real estate prices. Now, previously, the Bank of Canada hadn't taken any responsibility for this increase in real estate prices, and as of right now, they still haven't. But some interesting statements were just made by the former Bank of Canada governor, the one who was in charge at the beginning of the pandemic, that might have you believe that they actually know what they're doing.
But the Canadian housing market is one that we hear more and more is just fueled by low rates for a long time. Is there some policy, and lots of action's been taken, is there something else that could happen other than rates naturally rising at some point and home prices coming down?
Short-term interest rates may stay low for a really long time. But in the background, I think if that's why we cut interest rates. We cut interest rates in order to boost the economy. Well, if we're not going to have a hot housing market, we won't have any reaction at all to that. And so that's all part of the side effect of the job that you're there to do. If the side effect is a hot housing market, that's one I'll take every day. My sense of this is, yes, it's hot. We could see signs of speculation, but we have to accept that because otherwise we would have, a really, really bad recession.
So this is the first time that anybody even remotely related to the Bank of Canada has said, hey, we recognize that the mass money printing that's been going on is a large part of why the housing prices have shot up in the way that they have. And essentially what he's saying here is that, hey, we'll take a booming housing market, one that's even getting out of the reach of many retail buyers. We'll take that so long as it means that we're not going into a deeper recession as a result of the pandemic. Now, we're not going to discuss whether or not this was a good thing or a bad thing because there are lots of points on both sides, and frankly, all of them have at least a little bit of merit. But what I will say is that there's something being ignored, and that's the broader societal issues that come when there's this huge boost in asset prices. It makes that gap between the wealthy and the not wealthy even larger, between people who have invested in things like stocks and real estate and people who haven't done so in the past. On this channel, I recommend that people start learning about investing in assets like this, because when it comes down to it, we can't count on the government to solve these societal issues and inequality. So really what we have to do is play the game by the rules that were already laid out. But despite the former Bank of Canada governor admitting that the housing boom is related to the Bank of Canada's actions, the current governor of the Bank of Canada isn't using the same language, and neither are certain politicians, and I believe that this is also a factor when it comes to the rampant growth we've seen in prices here in Canada. Just last month, the current governor of the Bank of Canada, Tiff Macklem, said in a very casual way, yeah, we're starting to see some early signs of excess exuberance in the housing market. But this sort of casual tone that he took didn't make it seem like they were at all actually considering doing anything to sort of curb this growth. When the Bank of Canada makes comments like this, as well as saying things like, we don't see overheating in the housing market, we're going to keep interest rates low for the foreseeable future, what does that really signal to buyers? It signals, hey, this real estate market could run away from me, I better get in now. And that's increasing the demand for these homes even more, sort of perpetuating this problem. But despite the Bank of Canada not wanting to come right out and say we are responsible for this boom in housing prices, they have said some things that are sort of little hints that they know this in the back of their minds, but they just don't want to say it to the public.
Do we need measures right now with respect to housing? I think right now, economy is weak. We're just coming out of this second wave. I think we need, we need those. We need the support. We need the growth we can get.
So you can see here how he's sort of stuttering and being very careful with his words not to say the wrong thing. But what he does say is that we need to take the growth we can get. Now, this hints at the big problem that is going on right here in Canada, and it's the fact that the housing market is a large part of our GDP. If we don't have growth in the housing market, our numbers look a lot worse than they currently are. So all of this probably leads you to believe that the Bank of Canada knows what's going on, it knows what they're doing, and they're actually making the choice to continue doing this despite the huge asset inflation that we've seen. But now let's take a look at what politicians are saying. And not too many people are talking about the housing market right now, often saying, hey, we need to worry about getting out of the pandemic situation first before we start tackling these other major issues. The fact that not many politicians are talking about these issues also signals something to buyers. It says, hey, the government doesn't seem too focused right now on implementing any sort of new policies that could slow down this market. We need to get in, we need to buy now. But there is one politician that has been bringing this up from time to time in the House of Commons, and he's a loved by many and also hated by just as many politician, and his name is Pierre Poilievre. Now, he's largely known as someone who will absolutely hound Trudeau at any opportunity he can get, and whether or not this is actually warranted or not, that's a different debate. But in this statement in the House of Commons, he actually makes some points that most politicians don't.
And then you move to real estate, where prices are up $65,000 this year. Can you imagine, Madam Chair, that in a year where our economy has lost over $100 billion of economic output, where hundreds of thousands of people have lost their paychecks and been forced into their homes, that somehow we found all this money to buy real estate? In fact, in the year from the beginning of 2019 to mid-2020, the inflation of our assets in this country has been worth more than our entire economy. $2.7 trillion of asset inflation in an economy worth just over $2 trillion.
You'll probably notice the phrase he uses in there, asset inflation, and that's certainly something we've seen since the beginning of the pandemic with this huge boom in real estate and stocks. If you've been invested in these things for the long term, you've certainly benefited from this asset inflation. But the main concern comes in when you realize that the Bank of Canada, the one who's supposed to monitor inflation, doesn't actually look at asset inflation as part of what they use to measure inflation. They look at the CPI, which doesn't include many of these assets. In the Bank of Canada's mandate, there's actually nothing that says they have to take any consideration of the housing market when it comes to implementing their new monetary policy. But what they are mandated to do is to control inflation and to try to get it to a 2% mark. Now, of course, that's a big problem when the data they're using to come to that 2% number doesn't include the very thing that's being inflated.
So can Canadians afford the real estate they have right now? Well, ask RBC and ask the CMHC. CMHC says for a home to be affordable for a family, they shouldn't have to spend more than 30% of their income on housing. According to RBC, the average right now is 50%. So we're 20 percentage points more from family budgets have to go to housing to afford the houses that we live in, for the average person to afford the average house.
Of course, he brings up the issue of affordability when it comes to buying a home here in Canada. And this is something I've seen on the front lines working as a realtor in the Greater Toronto area. Many of the buyers that I've been working with are struggling to be able to purchase a home because of the mass competition in the market right now. But in a report from the same bank that Poilievre mentions in his statements there are some solutions that they've put forward that Poilievre may not actually like himself if he were to find out about. This is a report from RBC Economics where they address the current situation in the Canadian housing market. And inside of this report, they actually put forward some potential solutions that they think could slow down this huge growth. Now they lay out a bunch of different ideas here, but here's one that I found particularly interesting. They say policymakers should put everything on the table, including sacred cows like the principal resident exemption from capital gains tax. These considerations will be complex, controversial, and no doubt fraught with unintended side effects. Yet this support was largely designed during times when interest rates were much higher, and in some cases to counter the effects of high rates. Now, if Poilievre were to read this recommendation from the very same source that he cited in his speech, he may not be too impressed, because of course one of the conservative hallmark policies is to oppose any increases to taxes. Now, if this recommendation was actually implemented and they eliminated the capital gains tax exemption on a primary residence, it could be a very large tax bill for people trying to sell their homes. I think this calculator will help to show you what I mean. If someone were to buy a property for $250,000, say 10 years ago, and now this has grown to $500,000, then they'd expect to see a capital gains tax when they sell this home of over $50,000. Now, as of right now, this is only due on the sale of secondary residences or rental properties, but the idea here from this RBC article is to implement this for all homeowners, whether or not they have one property or 50. I suppose this idea could potentially make it less desirable to own a home here in Canada, but would that really help anything with the affordability issue? In many cases, people may opt not to sell their homes because of the huge amount of capital gains they'd have to pay, instead opting to get a home equity line of credit or a cash out refinance so that they can actually take that capital and invest it without having to sell their home and have to pay taxes on that money. And of course, with less people selling their houses and more people wanting to buy, that's just going to spur prices to go even further. So there are concerns even with some of the solutions that are being brought forward. But bringing all of the things that we've talked about together now, it just seems that there's no silver bullet to this issue. I mean, what was anyone supposed to do? Was the Bank of Canada supposed to not start their money printing quantitative easing program? Well, what would have happened then? Would people have not been able to receive the supports that they received from the government, like the CERB, the CRB, many business supports? Maybe the Canadian government, if there wasn't this program from the Bank of Canada, wouldn't have been able to provide these largely necessary supports to stop businesses and Canadian individuals from going underwater. Should politicians as well as the Bank of Canada change the language they're using to try to shift the narrative about Canadian housing prices and this expectation that they're just going to continue going up and up and up? Would this even be enough to slow down the growth that we're seeing? We just don't know. It's such a complex situation, and it seems that many people are just stuck between a rock and a hard place, but hopefully there's some solution in our future, and thank goodness it's not on me to figure it out. I'm going to leave that for somebody who's a whole heck of a lot smarter than me. But with that said, I'm really interested in what you have to say about all this. Let me know down in the comments. There are so many different opinions and different ideas, and there's probably many things that I've missed here in this video, so let me know what I've missed down in the comments. I read every single one, and I try to respond to as many as I possibly can. And of course, make sure to check out the links in the description where you can open up your own investing accounts and start taking your wealth into your own hands. And of course, if you haven't already done so, make sure to subscribe to the channel and hit the notification bell to keep staying up to date with Canadian content just like this. And with all that said, thank you so much for watching, everybody. I really hope this video has helped you out at least a little bit, and I'll see you next time. This channel is supported by viewers like you. Thanks, channel members.